All right, hello guys. Thanks for tuning in. So, a lot to cover today, right? So, we'll talk a little bit about my short that I'm currently in and some of the positions that I have already closed so far for the week in profit. We'll talk a little bit about oil prices. We'll talk about gold. Is it a good time to buy gold? I know that that's the topic that everyone's talking about. So, stay tuned because I'm going to tell you whether gold is a good buy. Okay. So, let's talk a little bit about the fundamentals on the Euro AUD side. So, if we take a look, what we can see is that Euro AUD has been getting a bullish score, and we've actually got a stronger score of 60, and you can see Euro is getting a score of only 46. So why is that? Well, firstly, a big part of Australian dollar dropping a little bit today, as you can see, we had a pretty strong drop here during the Asia session, and that was largely driven by the recent data that came out for unemployment and employment data on the Australian dollar side. So if we take a look, we can see that the employment data came out really high, hotter than expected. You can say unemployment came back still at 4.4%. Unemployment has been creeping up a little bit in Australia, but we're still historically at low levels. And jobs wise, well, was a really great beat. So what we can see here is that the strong jobs data strengthens the Australian dollar and supports RBA's hawkish bias. So this data that just came out for jobs is going to deter the RBA from switching away from their hawkish bias, right? So they've been hawkish for quite a while. And as inflation is still a very sticky problem. And we'll talk a little bit about that as well and how inflation is, whether it's going to rise, what do we think. But for now, RBA is not necessarily thinking of committing to raising any rates, but for now, jobs data is still pretty decent, even at these interest rates, right? They are obviously having a rate of 4.35%, one of the highest, if not the highest, in within the GA spectrum, right? So, yeah, so that's going to put a lot of strength on the Australian dollar, right? That's going to put a lot of growth, a lot of bullish consensus for the Australian dollar to go higher. So I think Australian dollar has some really solid plays that potentially we can look into. But so this really did help my trade on this short go lower. Now I was also in AUD Swiss franc. This was strictly more of an interest rate differential play. But at the same time, what we can see is that yeah, I mean, looking at it, I wish I stayed on a little bit longer, but I wanted to take some profit. So you can see right here, this is where I actually exited. I wish I actually held it a little bit longer. My actual real target was actually right at this range, right at this high, which was, I believe this was a daily high, daily resistance level right here. So I think we're probably going to come back to test that, but no worries. I wouldn't mind also looking for a potential pullback to enter for continuation. The daily chart has been very, very clean on the Australian Swiss franc. So I may be looking at the daily as my main time frame. Usually, those who know, I take my executions usually on the 4 hour, but this time the daily has been a very, very clean trend. I wouldn't mind taking it also on the daily, but I also want to leave room for potential moves on the 4 hour as well. So if we actually do respect the 4 hour right here on our key levels and we continue higher, then I wouldn't mind actually just stabbing at a long again and continue. If not, then I wouldn't mind letting it come back to our daily levels and then look to potentially rebuy, because right now the Australian dollar has some real reasons for continuation. You gotta understand, we've been pretty flat in the market lately, right? We've been getting a lot of disinflation data, but a lot of data is very old. It's not really basing on the current regime, which, look, inflation is still going to potentially be a problem, right? Oil prices are still really high. We're currently at $87. If we take a look at WTI, we can see that oil prices have already broken out to new highs. We have taken out the prior area of support on the daily, and as long as the escalation continues, there's some real reasons for continuation. One of the bigger winners for this week was CAD yuan. So you can see I've sold pretty much everything into the highs right here. And my plan was to wait for a pullback, but it doesn't seem like we're going to get that. All right. It doesn't seem like we're going to get that. It looks like right now we may actually continue and potentially break this high. So look, I am still potentially looking for some continuation on the CAD yuan. I think we do have more room to continue. And the thing about the CAD yuan, if we take a look at the daily, it can really, really run. Look at this, right? We can see right here. We have pretty much 5% move, right? with barely any pullbacks. Okay, same thing here. We are only at 2.46%. We have more room for higher prices. As long as there's escalations, guys, as long as oil prices are elevated, CAD is going to be following that sentiment. All right. So I think we still have some potential for higher prices. And I would love to get a pullback into our into this area right here on the 1 hour. I'll be looking at the 1 hour actually. I would love to look for an entry right at this level, and then we see if we can potentially go higher. Now, of course, we are at an area of resistance, so I do feel that we could get a pullback. Also, another thing is you can see during the Asia session, you can see how price moves up. Usually what happens is London could either follow that trend, or there could be a pullback which will sweep a lot of London traders out, and then that pullback will give a great opportunity to enter maybe towards either mid of the London time frame, or maybe the overlap to New York. Okay, or at New York as well. So we'll wait for a potential entry here on the CAD yuan, because I think there's still a lot more room for growth. Okay, of course there's a risk that this de-escalation can happen, so just keep an eye on that. And yeah, so coming on a Euro AUD short. So Euro AUD, I'm looking for a scale in. We'll see if we can get it here. Either scale in right here where I've drawn this circle. You can see it's respecting this trend line. Now, I'm not really a trend line trader per se, but this is by far one of the cleanest trend lines we've seen so far on any sort of pair. I don't know, for months. Okay, and this is extremely beautiful. So I want to see how it reacts at this level. I'm okay to hold this trade, guys. I'm okay to hold this trade. We have some real fundamental drivers for Australian dollar to continue higher. Euro is still, in terms of the backdrop, is weak. We do have Euro interest rates coming out today, but guys, we're probably going to stay at the neutral at the rate that we're in at 2.4%. I don't think there'll be any change there, so there won't be any sort of volatility that we have to be worried about. Okay, so these are perfect times to look for potential shorts. So it's either right at that trend line area. So I don't mind. I'm still holding the initial position. I would like to wait to see if we can get another scale in for continuation lower. If not, then it's all good. If we do break out this high and we actually hold this and hit higher, I'll close it for pretty much a little bit of a profit. It's fine. In trading, we make money through these runners, and these runners are the ones that are going to give us our payday. But that also means we might be open to potential reversals, and that's something that we're going to have to accept. Definitely I could have exited some here for sure. Definitely I could have definitely done that. But yeah, it is what it is. My plan was to continue enter back into that scaling. I may even cover a little bit earlier, wait for price to come back here, and then maybe take back a step short, because guys, I have some real reasons for this to continue lower. So let's talk a little bit about the fundamentals here, shall we? So give me a moment here. Let me take out my fundamental scanner, and then we'll start going right here. Okay, so the fundamentals right here. So we can see AUD is getting a 60 out of 100 bullish score. Euro is getting a 46, essentially neutral to basically bearish, and AUD is getting a really strong score of 60. We can see right here on the fundamental side, fundamentals are still relatively okay. 48 out of 100, nothing amazing, but compared to Euro, we're getting only a 43 out of 100. Bank research is also extremely bullish. COT levels are good. CB stands is also bullish. We take a look at Euro, we're getting quite a lot of weak data like COT levels, right? Fundamentals are weak. You can see here we do have some bullish reasons for continuation. We can see as well, most importantly, we can see that the ECB is at 2 at a very low rate here, while the RBA is at 4.35%, 0.35% based on CPI for RBA, while ECB is actually at a negative 0.4%. So they're actually lower than the current inflation. So there's, look, there's still some room for ECB to go higher. They're still below the neutrality side, so that can happen. But the other thing that ECB is facing is they are a large importer of oil, and that's really going to drive growth a lot lower as compared to RBA that actually do export oil, not weakness in growth, right? But for the ECB, they are a full importer of oil, so that's really going to drive growth lower, that's going to be very bearish for the ECB. All right, so we can take a look at COT positioning. We can see that Australian dollar is getting a really strong COT positioning compared to the Euro. Retail as well. Okay, look, so retail, we are seeing a strong buy signal on the Euro AUD. So a lot of people are actually long here, about 73% long. We want to short them. Okay, we want to go contrarian. All right, so I use the retail data as a contrarian tool. I do not follow the retail. We want to follow smart money. Right, bank consensus as well. We're seeing some bullish moves as well. And yeah, so seasonality wise, we are told that Euro AUD can move higher. So there's a possibility that Euro AUD can actually head to higher prices based on the historical data. However, we do need to understand that seasonality does not account for current regime, right? So that means the indicator right here could be inaccurate. Okay, so that's something you want to take note as well. And you can see from the change of scores, we can see Australian dollar has been rising relatively well, while the euro has pretty much been flat for the past few weeks here. So yeah, real reasons for the euro AUD to continue going lower. I'm looking for a scale in, right? So right now, what we can see, I'm not in this position right just yet because we want to wait for confirmation. So let it pull back. You know, we had a really strong push to the downside. Let it pull back. Let it tap some sort of key level on the chart. And then from there we'll see if he wants to go lower. If let's say price doesn't come back there, which is what I would like to ideally short into, and instead we see price pull back and then maybe head back lower, I would step back short, okay, and then we'll potentially fade this lower. All right, so that's euro AUD. I think some real fundamental reasons for continuation on the euro AUD side. Okay, euro has been a pretty weak currency so far among the G8s. And so yeah, really we can see that if we take a look at some of the recent news that's been popping up, we can see there's a lot of Iran news. If you just type Iran, okay, we can see how much news in the past few hours we've just been getting, just non-stop war back and forth. And how does this affect oil prices? Well, let's take a look at the WTI, right? We are basically at 88 at this point. Okay, guys, we've taken out the daily area of support. We're spiking to higher prices. This has completely shifted from bearish to now potentially not just potentially, but we are definitely at bullish prices again. You can see we were initially at pre-war levels, right? We were down almost basically 40%, and now we're pretty much reclaiming that, and we're up 31% since. Now if we take a look at Brent, we can see we are already past $90 here, and we've just been pushing up higher and higher and higher. So I think this war escalation, I think a truce is pretty much off the table. MOU has also been broken, has been breached, and the issue now is we have war in Russia and Ukraine. You know, the Black Sea is utilized for also oil kind of passing through. That also possibly is disrupted. So much of the Bab el Mandeb Strait, essentially. Okay, so this is positioned in the Red Sea, connecting the Red Sea essentially, which is also a very crucial route for global as a potential global trade route. Okay, it takes in about 10 to 12% of global maritime trade, guys, and they're open to basically say, look, we are completely fine in just completely closing this down because of the war. Right, so that there's not just the Strait of Hamas, but even other routes are getting affected. So does that sound like oil prices are going to go lower? Right now, clearly a problem again that we're facing, and this is creating a lot of problems for risk on assets, right? We can see the Nasdaq has really not been moving since the 3rd of June. We've just been sort of staying within this flag, right? So what do we do from here, right? Well, who knows, right? But let's take a look at gold, because I know that's the topic that a lot of people want to talk about. Gold. So gold, look, gold is spiking up really nicely. When we have this war going on, inflation is still a problem. That creates a lot of pressure on gold, and this move doesn't really mean much. I mean, this doesn't mean that it's going to continue higher. Now, I'm not saying, look, I like gold. Okay, I'm a big advocate of gold. I'm not a hater on gold. I don't have some sort of personal preference. My preference is based on fundamentals. When we look at the macro regime, we're seeing war escalations. Inflation is possibly going to be a problem again, and it's back on the table. How is gold going to be something that will go higher? Because of disinflation in the US. But now that might be over with the current oil prices. So guys, I personally think that there's still a lot more room for gold to continue higher. Look, if we take a look at the Edge Finder, okay, we are getting a bullish reading. Gold, okay, has been getting a pretty decent score. Of 49, still neutral, but the fundamentals are favoring gold for longs. Why? Well, because we've been seeing weakness in the US dollar. If we take a look at the US dollar here, we're actually getting some weakness on the dollar. We were actually weaker than this, so we had some increase recently, I believe. COD positioning, all right, cool. but we can see that the fundamentals have been relatively weak on the dollar, right? So we can see if I just bring this right here, we can see that it's 39 out of 100, right? So we are weak on the fundamental side. Bank research is also weak. So there's some real fundamental reasons for gold to continue higher. So the fundamentals do favor gold, right? Because of the weaker CPI data, weaker jobs data, weaker some easing in PMIs and things like that. Fine, okay, but that would be great for gold. Don't get me wrong, that's great for gold, right? That's a risk, very very a strong reason for stocks to move, for risk on assets to move, for gold to move in this current regime, in this particular regime, right? Because the whole idea is inflation. Inflation's the fear factor here, right? But if we have this war, until the truce happens, things will take some time for continuation on gold. I think gold is still pressure, but there's differing views, right? Some believe the dollar is going to head higher, and we can see that. How do we know? We can see that in the yield market. Look, yields, the short end yield of 2 year, we're already breaking out the new highs, guys. We've taken out the all-time high. Okay. So, and if we take a look at the dollar, does this look bearish today? If we bring it out to the daily, does this look bearish? No, it's pulling back. It's consolidating, and it looks like we may hit higher, right? We see yields moving higher. The dollar usually follows in that regime, but it's taking a little bit of time because markets are kind of in between. Okay, the data does support gold in the fundamental side, but the current regime doesn't support it. I'm quite neutral on gold. Now, when would I change neutrality? Well, if we take out this high, it will be even better if we can get a truce. Then that would be phenomenal, right? I'll look for pullbacks. I would like to get back to it and go long and go in. That's my plan. Okay, but right now I would not be buying gold, so I just want to make that clear. Okay, you can buy. I mean, it's up to you, but that's just my opinion. I don't think that's what I'll be doing right now. I want to be focusing on plays that have some real reasons for continuation. I think Euro AUD would be one of them. All right, I think there's some real reason for continuation. So if I can say the last point is, as long as war is continuing, there will be pressure on gold, and I think there will be a little bit more, mixed views on this, right? Because at the same time, the dollar doesn't necessarily need to head higher, but if we do have some hawkish, tone from the Fed, they're opening to hiking rates again. That's never been off the table in a sense. They've never really provided any sort of forward guidance on that front. But if we do see inflation come back on the map, that might change things for the Fed, and I think the dollar could see some potential upside. All right, and yeah, so that's what I would say. All right, anything can happen, guys, but yeah. All right, cheers.